The Apple event came and went today. It had its impact on the market, but there's something else that had a bigger impact across different asset classes. I'm going to talk about that move and what it could lead to if that move continues, and how that can impact equities and stocks and sector rotation, and where there may be opportunities in the sector. Today's trade idea looks at a recent sector of strength and finds a stock that's giving a good long-term breakout signal that might, at least in the short term, set us up for a good trade. Let's go ahead and get started. Today is Wednesday, September the 12th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you who are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel, and you can do that really easily. Mouse over the Market Scholars logo right here, then click that red subscribe button that pops out. That will subscribe you to our channel. Also, click the thumbs up icon that's right below there. That tells me, number one, I like the video, you like the video tonight, and number two, it tells me, David, let's do this video again tomorrow. We'll check you out. Really quick and easy way to give us feedback. You can do that right now while you're watching. Comment on anything that stands out to you from tonight's video. Join our daily Market Outlook email list. We send that out to you on a daily basis. You click that link over here in the top right corner to subscribe. Really easy way to do that. Follow me on Twitter for more content like this. And join our community. Join our Market Outlook community on Facebook, as well as our Market Scholars website with the process I'll show you here in just a few minutes. All right, first of all, let's take a look at the S&P 500 with the market forecast indicator. You can see the intermediate line turned up again, so just barely. Doesn't even look like it turned up, but it did. It's rising. Yesterday's value was 70.18, so 0.05 of a point, not very much of a move higher, but higher nonetheless. So bullish. So we got green again, and it's dark green because we're above 50. That. Again, this intermediate run has not ended with the light pink shading. The intermediate run ends with the dark pink shading. Now, typically we'll get light pink first, but we can get light pink without getting dark pink. So, we are bouncing in the near term. You can see the near term line did get above 80, but not a lot. I mean, you can see how when the near term line in blue gets above 80, pretty solidly, then we have a good near-term run. I don't think this will be a quote-unquote good near-term run. I think we'll probably get into this area here, if not slightly higher, but that's about it. And you can see, again, we're bullish again, but man, we're really not that bullish. And the momentum line fell doesn't really matter as long as it doesn't fall to extreme lows, which we haven't gotten since over here when we were a lot closer. When when the near-term line was more bearish, we had more bearish short-term sentiment here. But we are bouncing. We're above, the low day during the pullback, the lowest low point. That 6 days of lower highs and lower lows. So the lowest low point was right there. We are closing above that high. The high of that day was 28.83. We're at 28.89 almost. So it is a close above the high of low day. But I wouldn't, again, I don't think necessarily, hey, we're off to the races now. We might be bullish again, maybe up to slightly higher near-term highs, but I think the odds are a lot higher that we'll probably peak on the next near-term peak will probably be in this area here, right? Again, like I said before, when I've been wrong, when this hasn't done what I expected, it's usually because we've been more bullish than what I expect, and so we can definitely bust right on through to new near-term highs like this one. But this one constituted a breakthrough above that old January high that we actually held for support on this current near-term decline pullback. So at some point in time, and again, I think sooner rather than later, we will get dark pink shading again, which will set us up for an end-of-year intermediate run of multiple months. I think that's still on the horizon. I just don't know, whether it's going to be at the end of this month or early October. But like I said, sooner rather than later, we'll get this kind of a move. And again, the Fibonacci lines are drawn to see where an intermediate pullback will get to and where to look for support. But the big obvious ones at the blue lines that happen to line up with Fibonacci retracement as well as old intermediate high points. Let's take a look at the Dow Jones Industrial Average. You can see it's been a little bit more bullish than the other indexes. It still has a strong bullish posture. It never did turn bearish. So we never did get the light pink shading here. Easily above a rising moving average. The near-term line, came real. We had the potential for a bearish near-term high. We technically still have a potential for another bearish near-term high. We got a higher intraday high, but not really a higher closing high point than this one right where my cursor is. That happens to line up with that near-term peak. And this near-term low is actually a little bit lower on a closing basis. So, not really the strongest near-term picture that we're seeing. We're getting frequent moves above and below that typically lines up with an end of an intermediate rally. So definitely something to keep an eye on. Of course, the NASDAQ and the Russell have been more bearish here lately during this near-term pullback, and it has not bounced up. The NASDAQ, so we're actually still pink here, not dark pink, but we're still pink, which means the intermediate line is still falling. The near-term line has not gotten to the reversal zone, and same thing in the Russell. Still bearish intermediate posture, but weakly bearish. And the near-term line did get into above 50, but not above 80 yet to really solidly pronounce a bullish near-term rally where we expect new near-term highs. All right, before we look at other charts, a quick reminder, click right here on this heart. That will open up this tonight's Market Outlook tweet. You can click the like button there. Click here on this image that takes you to tonight's Market Outlook post on our Facebook page, on my Facebook page. You can like that right there. And then the third click is click on that. Those three clicks tell us, David, we like the Market Outlook tonight. Please do it again tomorrow. Also, too, a quick reminder that we can discuss tonight's Market Outlook more in depth here in the Market Outlook forum on MarketScholars.com. To participate in that, you have to subscribe. You can do that for free. Just click on this image in the top right under Join Market Scholars. That will take you to our login screen. You can be able to subscribe to the site for free. And then click on that link, and that will take you to tonight's thread on the Market Outlook forums. Any questions or comments you have, and you want to continue that discussion with other market scholars as well as myself, you can do that there. When you look at from a long-term view, again, you can just see how we continue to maintain a bullish trend, and that's, again, another reason why it's a little hard to be too bearish when we're not even trading here in between these moving averages, and really haven't for a while since earlier this year, and before that, for quite a while before that. You can look at the Heikin-Ashi candle. Again, another body that's not getting above this high point with upper and lower shadows. So weakness, not turnaround like we have to go down weakness, but definitely a sign of weakness that the odds are getting higher, that we can get more of a pullback here. You can also see too on the 3 green arrows that we still got the 2 red. We never did get the 3rd red. We're still above a rising moving average. That's why it's green. Then you look at the 3 green arrow chart here, and you can see we're right back above the 8-day, still above the 17. We're back up above the 8, and the MACD itself and stochastics look like they have potential. They're still below falling moving averages, and they're both still dropping themselves. But they're down to levels we've seen before. Where actually here we got to the 30-day moving average before we bounced with more of a rally. So are we going to get this kind of thing? We could. I think the odds are lower that we'll get up to significantly new highs, but that possibility is there because we've seen it do it before. On an intraday basis, again, we got a higher high and a higher low. We did not close up above yesterday's high. Same thing on yesterday. So really for the last, 8 days, because we had a 6-day streak of lower highs and lower lows where we closed above the previous day's lows. This is the 3rd straight day that we've had higher highs and higher lows, and we've closed, yesterday we closed a little bit above the previous day's high, but not very much more. So 2 out of the last 3 days we've closed below the previous day's high. So we weren't that bearish here. We're not that bullish here. You can also see too, the volume ended up being about average. If I go back to the 3 green arrow chart here and pull up SPY, you can see the volume down here was about 59 million, almost 60. So right about the average. Keep in mind that average is about as low as it's been. Here's the average where it's at. You can see a few times in the past year we've been a little bit below that, including like right here on that bounce. So The volume is pretty low, so an average volume is not saying a whole lot. When you look at it on this page, you can see the range is 1.5 points. So 1.5 points is down here, so below the average on the ATR. Of course, the relative ATR is still easily in bullish territory below 1%. Again, above 1%, which is a 3-point gain or higher, that's when you start getting bearish. Right? That's when you worry about the bearishness, is when you get those kind of moves. And we just haven't yet. Haven't had. And you can see the volume at 60 million today, just a little bit below the average. You can see how low the average is within the 52-week range. Finally, you take a look at the volatility. It actually rose a little bit before falling the rest of the day. So it's grinding lower again towards this 13. That's what volatility does. It grinds lower. In fact, the last low point volatility has right there. So we're actually, forming a lower low now on volatility, and you can see on a relative basis, we're right back at the sweet spot. So, again, not that this means that we're going to be strongly bullish going from here. But it definitely means you shouldn't be looking for any kind of significant bearish move anytime soon either. The charts maintain a bullish trend. We can grind away here. We don't have to go down. We don't have to go up. We can just grind away here. And it appears that that's what we've been doing, at least for the last little bit. All right, so in summary, the markets maintain a bullish trend. And at best, I think we'll grind towards a slightly new near-term highs. I'm not looking for significant moves. I think we're getting towards the end of an intermediate run that we've seen on the chart. At worst, I don't think we're too significantly bearish either. I think we'll have more of a grinding move that will bring, there's lots of strong support below where we're at. So it's going to be hard for it to be too significant on that intermediate pullback once we do get that, which is that pink shading in the market forecast chart. So I think, once we do get an intermediate pullback, it won't be significant. It will be there'll be support down there where we can find opportunities for a bounce up to, new intermediate high points again by the end of the year. So that's kind of my summary of how I'm looking at things right now, and kind of it seems like we're still in the summer, at least according to how the market's moving, and that's at least in the short term what I continue to expect to see. So what do you think? Do you agree with that? Do you disagree with that? There's a poll popping out in the top right corner of your screen. Click on that link up there. Then click on either agree or disagree. If you click on disagree, let me know. Let me know what you see differently. Don't just tell me that you do, or that's what, what you think should happen or what you want to have happen. But show me, what do you see out there that suggests maybe we are a lot more bearish than what the charts that we're looking at tonight suggest. So again, just scroll down to the bottom, either in the comment section on YouTube or on the blog post on Market Scholars or in the forums, and be able to post there. All right, now let's focus on what's driving price action today. You can see from the calendar, the big news item on the calendar was inflation, which dropped. The year-over-year rate dropped from 3.3% to 2.8%. You can see what that looks like here. So a little bit of a drop. That's not as strong as it's been, and from how that's impacted rate hike expectations. You remember how the March, which is kind of the next meeting in play, at least according to the futures market, it dropped a little bit. It was a little bit over 50%, and now it's just a smidgen under 50%. So still around a coin flip that we'll get another rate hike after the September one. That's pretty much 100% here this upcoming month, at the end of this month, couple weeks from today actually. We'll get this rate hike, 95%. Pretty decent odds we'll get another rate hike in December. We're looking at almost 80% odds that we'll get a rate hike in December. That's down a little bit from what it was, but still pretty high probability. Of course, January we'll have a press conference, so technically we could get a rate hike in January. Only about a 10% chance of that. So really, according to the futures market, the next meeting in play is the, as of right now at least, the March, and those odds dropped a little bit with the inflation coming down. You can see the economic surprise index still slightly negative, not as negative as it's been. It's really not dropping or rising one way or the other. It's pretty flat, and same thing on a global basis as well. So we're really not, usually growing economic indicators will beat their estimates as they grow, and falling economic indicators will come under estimates as a drop. So right now we're kind of just matching estimates and not really going one way or the other, but still maintaining pretty high expectations for strong economic growth, in this case at least for Q3 in the US. So what that's done, you can see, the big movers today, crude oil and gold were big movers because the dollar was the biggest loser. And the dollar may be starting to show a little bit of weakness on a technical basis here. Finally, yellow moving average means we're below a rising moving average. Hasn't turned red yet. Gold has finally gotten above, so it's yellow. Crude oil is above a rising moving average now. You can see the high yield bond market's kind of rising along with equities here. The bullishness we've seen in equities tends to behave like that. TLT has been dropping, which means yields have been rising. Long-term yields have been rising. You can see today bonds did bounce back up a little bit off of their lows. Emerging markets, international stocks outperformed on a day where the dollar was down. The S&P 500 was up a smidge, but outperforming small caps. That is a risk-off trade. Of course, bonds outperforming stocks is also a risk-off maneuver. There's other risk-on types things. You can see gold or crude oil outpace gold, commodities outpacing agricultural commodities. You can see emerging markets outpacing EFA. So there are some things, but value outpacing growth, pretty not significantly, but it's a lot further up the list, above all these bond asset classes that typically don't move anywhere. So the main driver was the dollar to the downside, and that produced some bullishness in these areas that have been relatively beaten up here lately. Also helped a lot of these foreign markets also, which have been beaten up lately, outperform, especially India. Again, if I were to come over here to the 12 grid, you can see India has been really struggling lately, but it had a nice good bounce today. You can see Russia and China, two of the, these are really your three biggest emerging markets, really outperforming, whereas these major European and US and Japan all lagging, still with gains. And again, I'll say this again, if there's any kind of renewed strength in emerging markets and internationals, and I did want to show you this. You get a reminder of how bullish the S&P 500 is on a long-term basis. But as I scroll through these other major economies, there's China below at the falling 200-day moving average. Long lower shadows there, so some support opportunity around $40. But the death cross, 50 crossing below 200, they're both falling. Japan also a death cross, both moving, both the 50 and 200 day falling. Potential harami developing that long upper shadow from a few weeks ago. Germany below death cross below falling 50-day moving average and 200. So pink shading in all of these long-term charts. There's the UK. France just barely did get the death cross. India has not, and some long lower shadows are helping it. There's Italy. It's been the worst European. There's Brazil showing up here. Canada has not had that death cross quite yet. It's been an outperformer. And you can see Russia is having a good week, but also with that death cross. And then finally Korea. So, again, if the S&P 500 was below a falling, it's had multiple weeks of the 50-day falling below the 200-day, then we'd be in panic mode. So just to kind of give you an idea that, the U.S. market is outperforming quite a bit relative to where, your money could be parked as an investment vehicle anywhere. So that just kind of shows the resilience of the U.S. economy and the U.S. stock market. And also, again, if there's any kind of bounce in these areas, see when they rise, when these are green, you can see so is the U.S. market, right? So a big chunk of green there, well, so is the U.S. market. And so, we're not going to turn pink all of a sudden because they're turning up. If they turn up, most likely we'll continue to go up, as well as there'll be more of a global macro bullish cycle, and most likely will require some kind of resolution on the trade front for that to happen, since that's the biggest culprit for what's weighing down a lot of these foreign markets. All right, if I take a look at the sectors again, sorted by Brandon Sector Selector rankings that he posts every Friday, you can see over here Staples had the best day today. They're kind of middle of the pack, but they've had a good little bounce up to old highs. There's your telecommunications. They're bouncing up a little bit. It's a new communication services sector down here. Energy is bouncing. Again, with the weak dollar, you expect energy and materials to improve, and they did slightly. Healthcare maintaining. It's been a strong outperformer. It's maintaining that strength. Industrials is a new outperformer. So it's also maintaining some strength as well. Financial struggling, kind of breaking down a little bit. And then also technology also struggling a little bit today. A lot of that kind of driven by knee-jerk sell-off, sell the news kind of a phenomenon with what's going on at Apple there. Remember, Apple will maintain its position in XLK once they do the sector official the sector change. So that's what's going on in the sector. If you look at the excuse me, not the 12 grid, sorry. If you look at the 1 year chart, so this one, nope, I keep clicking on the wrong one, sorry. This one, sector comparison, you can see that utilities and healthcare have been outperformers. So that healthcare might not have a whole lot of gain. It can continue to outpace. I wouldn't expect a real strong move. Again, I think your biggest bet for outperformance for significant moves will be from down here because they've been lagging so much in the last 3 months. Again, keep in mind, they won't just turn up just because they happen to be down there. They have to have a spark to turn up. Industrials have had that spark. Industrials here is in this blue. You can see how it was such a big loser before, and it's really been taking off, whereas these other losers haven't. So it's had its spark, and you can see that when you look at like the long-term chart here. Look at XLI, which was struggling with the tariff news. It's gotten back up above these highs here, making its way towards January highs. Materials hasn't. It hasn't broken out yet, and neither has energy. It's really been consolidating. Hasn't really been bearish, but we're trading between the 50 and 200-day moving average. The long-term momentum is declining, so not really getting that breakout candle. You can see we've had bearish candles here, but small bodies, upper shadow. So we're not trending down, and we're not getting that good solid breakout either to the upside. And there's XLB again with the Hakiyashi. No strong bullish candle here that we can hang our hat on and say we're starting a new bullish trend. So at some point in time we will, and there'll be some good potential there. But it will most likely have to do with a breakdown in the dollar. And the dollar is getting more of a bearish candle again today. It's not as bearish as it could be as long as a small body, upper and lower shadow. But we definitely want to keep our eyes peeled on what the dollar ends up doing, and if we break down, because that's the next big move I think in the market, is a bigger move on the dollar and what it does. You can see the intermediate line rolled over without even getting above 50, and this would be a much lower high point. You can see short-term sentiments down, so it's dark pink. It's below what eventually will be a falling moving average. Not falling yet, but it will turn red. And usually when you get red and yellow and intermediate line down here, then we get that kind of a move. So this is the kind of move that as long as the markets stay bullish, in which case, if we get that kind of move, the international markets will take off. It will bring the U.S. markets up with it, and most likely will be led higher by materials and energy in that regard. So one stock in that strong healthcare sector that had a little bit of above average breakout move today, not really necessarily a breakout move, but above average move, is a CVS. I'll show you why I say breakout here in just a second. Its near-term line had pulled back. We had an extreme low on the momentum line there, and even came down again, opened up down. Things were looking pretty dire coming out of that overbought cluster. But we bounced off of this near-term low, higher than the last near-term low. We have been consolidating here. We had broken out above that high point. We pulled back a little bit. You take a look at how strongly bullish it is on the long-term chart. You can see, we're just the 50 days just breaking above the 200. You tend to get the pullbacks, and we did. You can see that some of these long lower shadows right after the cross before it takes off. So there's, look how bearish CVS has been for so long, and now it's got opportunity here. And you take a look at, like the Bollinger Bands for an example. The Bollinger, there's a lot of volume down here. We have been trading here for so long, and we broke out of these highs back here in August, September. And then you can see, there was a lot of trading from back in here too, that we finally broke out right there above the 70% volume. That's where 70% of this year's volume has been, and we broke out of that. There's not nearly as much volume in this area, at least in the last 52 weeks. So there's opportunity here for CVS to do more of a trend trade. You can see from a 3 green arrow standpoint, there's, it's had the one red arrow with the this little pullback, and the buyers are in control according to stochastics, but we had that one red arrow. We had that jump in volume right there with a good 1.5 times the average volume. You look at it on a 3 green 3 green arrow basis over here, you can see the momentum has been pretty strongly bullish. We're down below that, so I don't know necessarily, without more of a pullback, I'm not sure that we can start a trend trade yet. I want to see more of a drop to that 30-day moving average, bring the MACD and stochastics down closer to the midpoints, and then bounce. But you can see we are bouncing right now, so there's opportunities to do a quick short-term bullish trade. You can see selling the 75 call, buying the 72.5 put. When you take a look at that, I had more of a bullish trade here, but again, we don't. The reason why I'm not as bullish as I was looking earlier, because of how strong we already are on the MACD and stochastics. So that being the case, you do more of a short vertical spread instead of that long vertical that I was looking at originally. You can see it's a high probability trade. I throw that on the break even. I throw that break even slice on the chart. So as long as we stay above this little consolidation area, which remember, that consolidation area happens to be where that volume node is. So there's some strong volume to hold it above that level, and not as much volume that would hold it down from getting up towards these highs. So there's opportunity for it to rally. You can look. I was looking at a long vertical with the short strike at $80. That's an opportunity as well. So that's the alternative is right here. Selling the 80, buying the 77.5. You get, that's what this looks like. You get, there's actually two, but you can do both. If you do both, the debit doesn't quite, the credit doesn't offset the debit. I'd have to bring the debit down by going further out, right? 82.5 to 80. So that's how you get the credit. That's how you get it to where I don't have any kind of loss here. But then it'd have to really make a move. It'd have to get up to 82.5, which on the shaded area is not that big of a deal. But up here, that's like right into this area. So that's a much bigger move. 80's a lot more plausible. So let's get back to 80 and then to 77.5, sorry. So two bullish trades. One has a risk of $105. The other has a risk of $250 minus the 60, $190. So there's my maximum gain. Loss over here is $295. My maximum gain is $205. So almost a 1-to-1 reward to risk ratio. And you can see I've got less than a 50% odds of making money, because again, main reason because my debit is bigger than my credit. But it's not very far away before I get to break even. The break even is just under $78, and that's just right here. So that's a way you can do kind of both. You can do one or the other. If you're more aggressive, you can do the debit spread by itself. If you're less aggressive, which again, that high MACD and stochastics, you can also see too another reason not to be as aggressively bullish. Let's see, what was it? Short-term memory loss. CVS. Again, you can see the DI Plus has been bullish for a while. So it's not like we're just breaking above 25. So those are the factors I would say, you know what, I think I'm just going to stick with the less aggressive bullish trade. Go for the high probabilities. Get a decent return. You see I can get to 50% of my gains quickly. The other 50% take a lot longer to get. And I can keep my loss capped to about $60 with some strong support keeping me from raising the odds or lowering the odds that are already low of getting to that point. All right, now I want to hear from you. What do you have to say about tonight's market outlook? What do you have to say about the trade idea? Any questions or comments about anything I talked about? Any questions or comments on anything I didn't talk about? Let's share those with our Market Scholars community and the Market Outlook Forum. That link popping out in the top right corner of your screen there. Click on that link and let me know what you're thinking. As always, I appreciate you watching the video tonight. Remember to subscribe to our YouTube channel. Click the thumbs up icon. Let us know that you want us to keep doing the videos. Comment. Follow me on Twitter. Join our community. Join the Market Scholars community with how I showed you earlier in the video. Remember, you can also join us on Facebook as well. Have a great evening, everybody, and we'll see you all next time.